The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 14th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe that we should be pioneers of our future and never, ever be prisoners of our past. Of course, let's make sure that you and I, that we do everything we can to be pioneers of our future for this fantastic weekend. Of course, most of you in the north, stay warm out there. I did see a weather map. It looks like that cold front is moving south, but it's going to escape Florida. That's a beautiful thing. Hey, let's also always remember that life happens for us, not to us. And when we live by that principle, well, that means we can find the gift in every set of circumstances. And yes, folks, circumstances, they happen to each of us. It's just all about planting that sail and then just simply letting that wind just go ahead and take you and enjoy that ride. So let's do that this fantastic Friday and the fantastic weekend. Of course, I would love to hear from you. The easiest way to do that is to pick up the phone and dial me at 877-927-6648. Internationally, 727-445-1044. That would be a beautiful thing. This is TFNN. It's Fantastic Friday. I'm Steve Rhodes, and welcome to the show right now. Dow futures up 14 points. Trade out at 17,610. S&P futures up 2. They're trading at 2,036. Russell up 1.5, trading at 1174. NASDAQ up 4 points, trading at 4209. King dollar. It's got to be a he, right? Because the queen is the euro. So the king, it's got to be a he, up 493 ticks out here, trading out at 88.24. We'll take a look at that. You've got the euro back a bit, the Japanese yen continuing its move higher. Of course, that's putting pressure on Goldilocks. She's trading down $13.30, trading out at 11.48. 30 silver off 28 pennies, trading at 15.34. Light sweet crude up 49 cents, trading out at 74.70. A quick peek across the globe out here. We're going to find over in Germany, the DAX is now trading down. It's basically flat, off 9 points, no big deal. FTSE off 7. She's trading at 66.28. Slightly mixed bag over in Asia. Nikkei was up 98 points last night, a little over 0.5%. Hang Seng up 67, 0.25%, and to the downside by 7 points, 0.25% in the Shanghai. All right, so where do we begin? I think we got to begin by taking a look at the currency pairs. So let's go do that. Let's start off. Let's pull over here. Let's go take a look at your friend and mine, the Euro-Japanese yen out here. Euro-Japanese yen is up above that key reversal session. I got an email here from Stan. So Stan, thanks for sending me that email. He disagrees, which is fine, which is good. That's why we've got these. That's the beautiful thing. But he disagrees with my call on this bar right here, November 6th, being a key reversal session out here. Now, let me give you the slight, when you're dealing with, and here's the reason, okay? The reason that he is suggesting that it's not a key reversal session is because if you go to the internet, remember, there's a lot of bad information you can get off the internet. And so when I take a look at Japanese candlestick charting and the amount of bad information that's out there, no wonder people get in trouble. Now, when we take a look at a key reversal session, you're going to see everything out there says, hey, the open of the current in a market where price is moving higher, that the open's got to be above the open of the prior session. Look, when you are trading something that trades around the clock out there, the rules are different. So when you're trading futures, when you are trading currency pairs, the rules are absolutely different out there. When you're just talking about something moving one tick, one pip, that's just not the case. And that is certainly not explained on the internet. I'm assuming that's where that information comes from, because I've seen so much bad and incorrect information or things that are not properly qualified. What I can tell you is it doesn't matter whether you believe that the trading session from November 6th was a key reversal or not out there. What we can say is that price is above that resistance level, and it's on its way up into that 145.68. No guarantee guarantee that it's even going to stop there, but that does make a 100% move of a move. You're trading inside that swing point right now. That swing point is from December 27th, 2013. What you and I know more than anything else is that the Euro-Japanese yen tracks the U.S. stock market better than any other currency pair. We can take a look at key swing points inside this currency pair versus our markets out here. We'll see that they make highs and lows on the exact same day, most of the time. So we'll see. In this case here, it looks like the Euro-Japanese yen wants to continue its ascent higher into that 145.68 level. If we take a look at just the U.S. dollar Japanese yen, let's go take a look at that currency pair out here. That, of course, as we know, a couple Fridays ago, the Japanese government, the Bank of Japan, really is what I should say, because that's correct. Bank of Japan said, hey, we've got those printing presses rolling. Well, if we take a look at the A to B equals CD patterns out here, the A point, this is a daily chart we're looking at coming off the low from August the 8th, 2014. That's your A point. Your B point is October the 1st out here. That's the high at 110.08. That's on October 1st. Makes about a 57% retracement, so slightly less than a 0.618 retracement, and then boom, off it goes to the upside. Now, it made that 1-to-1 A to B equals CD. I'll be teaching folks on next Saturday, not this Saturday, but next Saturday, November 22nd, all of the tiny little nuances that you really need to know to truly master what the markets are communicating to us. Of course, in this case here, we saw the 1-to-1 price moved up into that with a nice kind of mid to wide-ranging bar. In fact, if not for the prior bar out there, it would have been a wide-ranging bar. And it still was a wide-ranging bar. The Japanese yen now over the 1-to-1.272. She's on her way into the 119.08 level. That's what the daily chart. So remember 119.08. Let's go take a look at a weekly chart here for this currency pair. Now, as this moves higher, that means it's getting weaker against the U.S. dollar. So you've got the as far as gold and silver needing to see a weak dollar out here. One of the competing currency pairs is numero dos, number 2, with regard to the weighting structure inside the U.S. dollar index. So here's a competing pattern that's out here. And at this stage of the game, I'm not seeing any indication that the U.S. dollar Japanese yen does not want to do anything but move higher into that 119.08. What's the weekly chart tell us out here? Good question. If we take a look at the weekly chart, we come all the way back down to the September 10th, 2012 level. That's your A point. Your B point, that nice straight line move up into May 20th, 2013, makes what? Makes a 0.382 retracement. The exact number, 37.37% out there. That says it's got an A to B equals CD, just a 1-to-1. That completes at 120.40. So you got 120.40 as a target. On the weekly, on the daily, it was 119, right? 119 and a change out there, 119 and 119.08. That becomes the target for the Japanese yen. So that's going to continue moving higher. That is going to go ahead and put some strength inside the U.S. dollar. So it's really, with regard to the commodity sector out here, with regard to its correlation and the U.S. dollar index, it's going to have to rely upon this currency pair. And that's the queen bee out here. That's the euro. If we take a look at the euro, she's trading down here this morning. The euro here does not have any kind of reversal signal whatsoever. Little piercing candle out here on November 7th. No real follow through on the next day. Just continuing to consolidate down here at the lows. So the euro at this stage of the game, it hasn't taken out the lows, but there is no reversal in place as we speak right now. Even if I go down and take a look at a short-term chart, why don't I do that? Let's look at a 30-minute chart, just see if there's any kind of pattern that's completed. Maybe there is. Oh, take a look at that little wide-ranging bar down here as we were coming into the show. Don't pay attention to volume. Volumes on this are not correct with regard to the currency pair out here. The futures would be a different story. No, so at 8:30, you had a little wide-ranging bar to the downside. A Super Mario out there. Now, if we take a look at that A to B equals CD to the downside, I don't think that has completed out here. If we take a look at that, let's take a look at what that price projection might be. A to B equals CD. So it's done the 1-to-1, but doing it with a wide-ranging bar actually suggests that we ought to see the euro move down to about the 1.2385-ish range out here. And what's going to be happening out there? Well, it's still not going to get down below its lows out here, those lows that were established on that little spike down on November the 7th at about 8:30, between 8:30 and 9 o'clock in the morning out there. So if, in fact, the euro moves down into that level, should continue to put some pressure on gold. Let's go take a look at gold. Let's go see what it's doing. It's up $12.80. Hey, as long as we're in a 30-minute chart for the euro, let's go take a look at the 30-minute chart here for gold. What did gold do? Well, look at that. As the euro was making that spike lower, remember we just took a look at the euro 30-minute chart. That was coming in here at 8:30 a.m. Look at gold. Looks, the candle almost looks the same, does it not? Look at this. You want to see the correlation here between, now the only difference here is that inside gold on the 30-minute chart, it's a real close, but it doesn't qualify as a hammer candle, really close. But take a look at that candle right there if you're watching us on TigerTV. Looks so similar if I just flip back over here and we go take a look at the euro on that same time frame. And so this is a correlation. Come on, now pop. Look at that. Look how close that really is in formation out there. So that just shows you the simple correlation between the currency pair in this case here. Now the euro, because it's 57% of the U.S. dollar index, that basket of currencies out there. It's why we need to be paying attention to what's going on there. Now let's go back to gold. Gold should have done the same thing, right? Make a 1 to 1 A to B equals CD to the, what the heck happened there? Went to Gold Corp. That was the wrong. Got to click on the right button out here. Let's go to the gold contract. That'll make things a whole lot easier. Okay, now let's take a look at its A to B equals CD down pattern out here. Now in this case, the A to B equals C. Well, this could be making a newer one. So there's a couple out here. Let's start with the most recent one that looks like that is in play. That would be this swing point right out here at about 10, 20, 30. That'd be 8:30 last evening as our A point down here at about 1:30 to 2 o'clock this morning as our B. Our C point right up here to about the 4:30 to 5 a.m. time frame. So it says Goldilocks ought to move down to about the 1141.50 level, 1141.50. Let's go on the daily chart, see where we're at inside gold. It should be right around the 0.618 area that it is trading at. Well, this is the daily. Let me pull this back and widen this up here just a bit. I should have done that probably on the short-term chart, but nonetheless, let's go from the key reversal session inside gold. And yes, this is a key reversal session on this trading session from November 7th. If you went and took a look at the textbooks out there, or you looked at the internet, it would not. It would tell you this doesn't qualify. I say blasphemy out there. They're absolutely wrong out there. So be careful what you are looking at in the internet out here. The 0.618 retracement level, that's 1149. That is where gold is trading at right now. 1141 becomes your 0.786 level. I think that really ties out that A to B equals CD pattern to the downside out there. So that is what's going on inside of gold. Let's go take a look at... Let's take a look at light sweet crude, just for the heck of it. Let's go take a look at the January contract. Let's go to a short-term time frame out here. Let's go see what kind of patterns, if any, are in play in light sweet crude. Looks like this is going to try to make an A to B equals CD to the upside out here. It will, there was enough of retracement out here. So it looks like what light sweet crude is attempting to do is to maybe make a little bit of a change in trend out here. Of course, 1 A to B equals CD won't really do it. But right now, you should see light sweet crude try to make its way up to about the 75.24. I'd have to say 75.56. Now, it would do itself a lot of good to get above this wide-ranging bar to the downside. That high is 75.41. We'll see what Texas T does as it gets up to that level. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change since we went into that break in the futures markets. Let's go take a look at. Yesterday was quite a devastating day in the markets. There were some very, very interesting signals. Now, of course, we've been following this. This is as we went off the air. As I went off the air, did the 10 o'clock show, wasn't able to, Santa had called me up to the North Pole for a quick board meeting yesterday and just couldn't get back in time to get that 9 o'clock show. But I was able to get back to the 10 a.m. show, and as we went off the air, I was saying there's trouble in River City. Well, the real trouble in River City doesn't occur until you get to the end of the trading session, and you can go back and you can assess any of the damage that was done out there. Inside the New York Stock Exchange, we can continue to see the price oscillator move down with prices, in essence, moving up. Yesterday, the New York Stock Exchange off about 11 points out there. It's its price oscillator. It's not that far from the zero line. You get below zero, summation index is going to turn south. That's 800 or so. I don't remember the exact number off the top of my head. Net declining issues that are needed out there for that to happen. If we take a look at the NASDAQ composite, red NASDAQ composite, which we'll go take a look at the NQ here in a moment. That supposedly is the strong dog, right? If you take a look at it, it formed a little doji candle yesterday up at the highs. Now that itself is not a reversal signal. It does tell you that the today's session would be important. But more important than that is really in taking a look at that price oscillator. Take a look. This tells you just how how this has truly lost its momentum on the way to the upside out here. So that is a problem. That pattern always resolves itself. Look, it sometimes resolves itself in some serious corrections out there. I'm not in that camp. Correction, yes. Serious or retracement, really, because we were on the I forget the gal's name, the gal from New York, and thank her for calling. But it was in the last segment, and she was listening to. I did a spot with Tom a couple days ago, and sometimes you're doing these doing the shows live and everything, and sometimes you're thinking one thing and maybe saying another. I don't know if you've ever done that, but I can raise my hand and tell you I've done that. And she had used the word correction. Maria, thank you, it was Maria from New York, and so no, I'm not looking at to me a correction, is something much larger than just a normal retracement. Normal retracement says the market's going to pull back to 0.382, 0.618, maybe 0.786 level. A correction, no, that then really starts a change in trend to the downside. The trend is still to the upside. The trend is to the upside in a big way, and what you should be looking to do is you should be looking to buy the next bottom. And there's going to be a next bottom out here. This market has not reached its highs out here. It's going to go. The S&P is going after its price objective of 2350 on the longer term. The Russell 2000 is going to go after its price objective of 1350. Of course, Russell's got to break above its consolidation level. Now, the Russell 2000 actually gave us a reversal signal yesterday. Speaking of. And so from the email I got, let's go take a look at the Russell 2000, the actual index out here, and it did form a key reversal session. Now, what did it do? We take a look at again, let me revisit for you what I believe is the correct definition of a key reversal. See, there's a lot of misinterpret. Like there are people who talk about reversal bars. Now they put that word key in front of it, but they talk about an uptrend or a downtrend, but it's not really defined. I'll define it for you. It's got to be an extended condition. It can't just be a little uptrend or a little downtrend or something. It's got to be an extended condition. And again, one of the easier ways to identify an extended condition, either the completion of the D point of an A to B equals CD, getting back maybe to a previous swing point could be one area to take a look at it. Using the relative strength indicator, that's another great way. You get up towards that 70 level, that's where things start to get into the overbought area. The 30 level, where things start to get into the oversold area. In the case of the Russell 2000, it's on today's Friday, so on Thursday. On Wednesday, the RSI reading closed out at 69.43. Close enough for me. What do we have yesterday? We have both a bearish engulfing candle. We have a key reversal session because both the intraday high and low was exceeded by the prior day out there, so it meets all the conditions for a key reversal. We'll see. And what the Russell did was it got back below that September 3rd swing point. Now, closing above the key reversal session, yesterday's high would say, hey, the heck with that resistance. You always need to wait at least another day to identify and understand whether it was just kind of a fluke or was it reality. You had a little key reversal type session out here on September 3rd. So that becomes pretty good resistance. Price got above it. I did that on on Wednesday, but right back below on Friday. So getting above yesterday's high, that price point inside the Russell is 1188.67. That would then cement to me that you're going to go visit the highs out here. Now, it's eventually going to go visit the highs. I just don't know if it's going to be maybe not next week, but the week after, when we see some kind of nice bottom form here over the course of the next week. But like a weather forecaster, I may revise that weather forecast based on new information. This is Steve Rhodes at TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 13 points, straight out at 17,640. S&P off, well, it's flat. It's straight out at 2,039. Composite off 5 points, trade out at 46.74. Russell 2,000 flat as well. She's trading at 11.75. The DAX down 11 points. The FTSE is flat out here, leading the charge to the upside. Baker Hughes, we got Baker Hughes and Halliburton, one buying the other. I don't know which one. Let's see. Baker Hughes spiked. Let's see. Who bought who? Talks to buy Baker. So it's Halliburton who's buying Baker Hughes. But that makes sense out there. But they're both trading to the upside by a couple bucks this morning. YY Inc. YY is the ticker symbol. That's up 4%, up about $3 out here. Tube Mogul, Tube. Tube Mogul. Who is that? Is that Basil's son that works for Tube Mogul? I can't remember. I think that it is. if I'm not mistaken out here. Hey, that is popping by 11% to the upside. Even if it's not, let's go take a look at that. My memory may not be serving me properly out here. But this is an IPO. It's had a couple of signs of strength. Well, it's had a couple signs of strength. One with volume. Take a look at this equity. Too new, really, to be able to give me a ton of information, but this had wide price spread, accelerated volume. That was on August the 27th out there, popped with about 8.5 million shares. Price came back, never actually filled the gap, never came back to the breakout area. Got down as low after that gap up. Got down as low on October 2nd at $10.53. You're almost a double as we speak right now. It's trading at $19.90. Had another sign of strength here, not necessarily by volume. Volume was about 1 million shares, but wide price spread. And that was on the trading session of October the 23rd. So you got wide price spread today, and looks like some accelerating volume. Tube Mogul, TUBE, is the ticker symbol. May want to take it. Would be nice if this thing could pull back, maybe even where could this thing pull back? You probably have to start looking at this thing right around the October 23rd bar, somewhere around that 14. No, I take that back. 1675 range out there. That's moving to the upside. You've got Schlumberger. That's up about 2% this morning, up $1.73. Nordstrom's is up about nearly 2%, up $1.83. To the downside, Cena Corp off 5%, down a couple of bucks. Gilead Sciences up a couple of bucks. Fossil off $1.83 out there. Celgene off $1.14. TJX Companies off $1. So nothing really significant to the upside or to the downside. Let me see, what is the VIX index doing out here this morning? Whoops, let's go over here. What's the VIX index? Just curious, is this moving to the upside or to the downside? Where are you? No, it's pretty much flat as we speak right now, so not a whole lot of change there. Let's take a look at, I think really, I mentioned earlier we were taking a look at the summation index. We were taking a look at the price oscillator for the composite. We'll go back there just for a moment. And then we'll go switch over to the NQ. That's going to be a little bit easier way for me to go ahead and try to track this thing here. Now, if in fact the price oscillator is down at 13, 12, about 13 right now, this gets below zero out here, that starts to get, you ought to get pretty twitchy. What this really would signal to us is that the underneath the covers there's problems out there. And look, with the move that we've had to the upside, just a normal retracement would be a nice thing out here. What you don't want to see, what I don't want to see, is somehow the market just moves sideways. Some event takes place over the weekend, and then you see a gap down, creating this huge island top inside the NASDAQ composite. I don't think that's going to happen, but it is something that we got to keep an eye on. Needless to say, there's problems in River City under the covers inside of the NASDAQ. Whenever you have prices moving higher and that price oscillator is moving lower, it is not a good scene. It is telling you there is something that is wrong out there. Now, if we go take a look at the NASDAQ, and we take a look at the NQ, I should say, just to get an idea for what's going on futures-wise. What did it do? Well, number one, it made a 1 to 2.618 A to B equals CD. It did that after making a seventh wave to the upside yesterday at 11 against a 30-minute chart we're looking at out here. Makes a price relative strength divergent pattern. All these are going to be tools that I will be showing you exactly the nuances, the tiny little nuances that you'll need, that you want to have in your trading toolbox out there. I'll be doing that on November 22nd. Again, that's going to be a 7-week workshop out here. That workshop, 3 hours, so you get two 3-hour workshops. The first one on Saturday, which will be archived. So if you can't make it on Saturday because of events going on, kids, whatever it might be, your golf game, whatever that might be, don't worry about it. It's going to be archived, so you're going to have that. That's going to be followed up 7 weeks later on January 9th on a Friday. We're going to do some live trading. We'll be covering all of the key questions that come in during that time period to make sure that everybody is very clear, because this is a mentorship. It is a coaching program. It is a whole 9 yards, as Tom likes to say out there, the whole kit and caboodle, because it's all about being able to empower you to be able to make your own trading decisions based on what you see the chart patterns doing inside the market. Now, inside of the market out here, inside the NQ on the 30-minute chart here, we got some reversal signals out here. That's what's going on inside the 30-minute chart. So that says, okay, you put in a fairly decent high on its pattern out here. But That's on the 30-minute chart until it breaks 41.89.90. 41.89.90 happens to be a moving average out here. That's this little black line going across the bottom of my screen. That level has held as support all the way up off of the October lows. And that says that that's the level that's got to be broken in order for there to be some serious damage. It would appear to me that that is going to be broken. Now, whether that's sooner than later, I can't tell you that. And that number is going to change over time out here. I think yesterday was right around the same area. But 41.89 is the number today to be watching inside the NQ on the 30-minute chart. We go take a look at the message of the markets. Take a look at the 120-minute time frame out here. 120-minute time frame, if that completes a 1 to 1.272, A to B equals CD to the upside. What does it do? It's got a price relative strength divergent pattern. What does it have? It's got dark cloud cover. It's got some additional follow through to the downside out here. 41.90 is also its moving average line out there that has held as support. You've also got the TAS market profile at 41.95. You've got resistance at 42.23, so we could see some more chomping around. Remember, on October 31st, after the Bank of Japan did all of its things, after the market, that morning, the Dow futures were up a couple hundred points. I came on the air and I said, now the market is going to start trading sideways, slightly higher, slightly lower. It's going to be a consolidation pattern out here, and it's going to frustrate the heck out of folks that are trying to trade the indices, trying to trade the futures market. That has come to fruition. If I was able to call the significant bottom, able to call a market that's moving sideways, I think the idea that the market is also going to pull back to form its next bottom out here, that is still in place as we speak right now, and we're seeing enough indicators out here to suggest that that is going to happen actually sooner than later. That does not mean today, but it is going to occur out here, and that's what we should be looking for. Now, 120-minute time frame chart, you get above the 42.30 mark out here, and really 42.23, but I have to say 42.30 out there. Then you're off to about the 42.46 range in its, that would take you to the 1 to 1.618, A to B equals CD to the upside. So in the 120-minute chart says, okay, you got some resistance up above. Inside the composite, it's telling us right now you got trouble in River City, continuing to make a lower low with its price oscillator out there. Inside of the 5-hour energy drink chart, it's just started a new market profile high out here, 42.19. You get above that, that would be bullish for a continued move higher inside the NASDAQ. I do believe it's going to be all about the NQ, all about the NASDAQ out there. She is going to be the leader to the upside and or to the downside. If we take a look at the VIX index, well below the 50-day exponential moving average, I believe. Where is that chart out here? Yeah, well, I don't know if it's well below, but it's trading out at 1381. It, too, has given us some potential signals here of a reversal in the marketplace, a coming attraction. Right now, you're trading at 1381, getting to 1522. Won't do that today. Well, if it does do that today, then you'd have a bounce because you'd have more than a 10% rate of change in one single day out there. But 1522 is the key number to be watching inside of the VIX index. That's your 50-day exponential moving average. But even the VIX has given us some signals of some trouble in River City. Now let's go take a look at some things that are moving in this marketplace, the upside and to the downside out here. Bit Auto, BITA, up 9% out here. Looks like they were out with numbers 72.32 million RMB versus 186 from the prior year. Is that a loss from the prior year? As far as I know, that would be Q3 profits being cut in half. Let's go take a look at Bit Auto. This is going to head for this high volume swing point out here that has not been tested. That is the August 26th level. That's up at the 98.28. That is where she is headed to. Also, the upside this morning, we got Amazon. Now, Amazon, that's a beautiful thing. That is proven, if we take a look at the weekly chart out here, that is proven to be when it opened lower, gap lower, that was on October 24th. It gapped right down into huge support out here. Let's see if those lines are still drawn in on my chart out here. No, they are not. How did that get... maybe it was on a different chart. But let's go draw them in right now. If you take a look at long-term trend line out here, we'll just put this in as a channel, make it a little bit easier out here. It takes you back to 2008, and if we take a look at price, take a look at how that was just like a perfect move down to a trend line inside of Amazon. We'll just put it up about right there. If you take a look at that, when price was moving down, I did a little special thing for the folks over at eSignal, and I know they distribute it, and got a lot of flack on that day. I recall, I won't say a lot of flack, a lot of people saying you're crazy, and say, yeah, I'm crazy good. And if we take a look at Amazon now, the reason that I say that is because it was months before when we were taking a look at Amazon and saying where would be the ideal place to buy Amazon if you were looking to put Amazon in your portfolio from a long-term standpoint. And what we came up with was we said the bottom of this trend line, as long as if Amazon can move back into that trend line, which is what it did for the month and for the week and for the day, no matter how you take a look at those trends on October, the week of, well, it was that day, but it was, I don't remember the actual trading session now, but you can see the bottom of that trend line, how it's held. Now what you're in from a monthly standpoint, now you can actually a bullish reversal signal out here inside of Amazon. So as long as it holds that trend line, it has, it did what it was supposed to do. It did its work to the downside out here. Now, it's pretty much likely to have to say that the midpoint, this little chartreuse, this little purple level out here, is probably the area where it finds some decent resistance at, I don't know if that's a 360 range or so, you're at 322. But until that trend gets broken, it just came down back to the bottom of a trend line out there. That is a beautiful thing. Let's go take a look at, also moving to the upside here, you got Green Mountain Coffee Roasters up only a couple of bucks, up about 1%, but this is the monthly chart. That looks pretty good. Let's take a look at expansions of swing point, see where this thing has expanded to from the high from September in 2011 down to a low in July of 2012. Looks like this is headed to the 1.618 expansion. It's well above the 1.272. It's done it with a nice bar out there that says 177.08. You're trading at 155.96 as we speak right now. That's with the larger time frame horizon, the monthly chart. That's the signal that it provides us. Let's take a look at Green Mountain Coffee Roasters here on a daily chart. Nice sign of strength, a couple signs of strength, really. One out here on August 22nd. That was at about the 125-ish type range out there. Wide-ranging bar, wide-ranging price. Volume, I should say, 10.7 million shares, the upside. Price never even came back to test the bottom of that. You saw another sign of strength inside Green Mountain Coffee Roasters on October the 7th. That was 4 million shares to the upside. So at this stage here, everything looks pretty good in the coffee roaster section of Green Mountain. Let's take a look at some things here. Moving to the downside, you've got Puma Biotech. That's off 16 bucks, down about 7% out here. Says they announced a positive top line, something or other, so it must be some drug trial out there. We take a look at this equity. Man, talk about the gap that this thing has. So gap down this morning, but the real gap that we're looking at is the change in a business model or something out here. So they had to cure something, and that was on July 23rd, because this equity went from a low the prior day. The close was 59 bucks, and it opened up the next day at 217. So that is that's the true definition of a wide-ranging bar, is it not? I mean, that is the true definition of a wide-ranging bar and accelerated volume behind the move of 8 million shares. Right now, what this thing is doing, it's pulling back and testing its most recent swing point on the daily chart, and that was from October 15th. The high there was 217. The low is 215, volume of 534,000 shares. I would say you're pulling back into that with a bit too much volume. It ought to go test the bottom of that. Now, in this case here, Puma Biotech, with that kind of change in business model or whatever it's done, you could use it seems like the 189 to 198.60 would be your level of support inside this equity. But with such a wide-ranging gap out there, it becomes pretty difficult to trade, in my opinion. PBYI. You certainly got to look to the intraday charts. We've got moving to the downside out here. We've got Biogen, BIIB. Let's go see what that's doing. Only off a couple of percent, down $6 and change. Let's go see what she is chasing after. We're going to have to wait until we get into this break, but it's pretty clear that Biogen's going to go after this little high volume low from October 22nd. She's headed down to 290.85. This is Steve Rhodes at TFNN. We'll be right back.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. I'd have to say the most interesting man in the room happens to be Goldilocks out here, well off of its session lows, and it's got some fairly decent volume we take a look at the 10-minute chart, I'm sure that Tom O'Brien and Daryl during the Nadex Bull Bear Binary Option Hour are going to jump right in and take a look at Goldilocks on this Friday. So in the face of the financial ointment, that being the U.S. dollar index, which is up about 468 ticks out here, maybe a bit higher. I've got a little bit 10-minute delay on that. You've got Goldilocks saying, I don't want lower price out there. Very interesting. Now, if we take a look at the 10-minute chart, we did see that big little flush down the toilet. That was coming in at 8:30 this morning, so between 8:30 and 8:40 this morning. Saw some decent volume out there, and now the volume to the upside, it continuing to increase. If you just simply, so it's still suspect. I guess we'll see what Tommy has to say about that low out here, that spike low into price point, what is it, 1146 out here. But, at least as it's been moving up here, this little counter trend, at least as it's been moving up, we've seen an increase in volume. Again, as an example, the bar here at 920 had 3,100 contracts. That was followed up by 3,800 contracts, followed up by 5,400 contracts. Right now you're at 4,500 contracts, and you got 45 minutes to 45. You got 5 minutes, a little less than 5 minutes to go. So you still got volume here actually pushing to the upside. Let's go see what is this thing actually pushing into. And it's above this bar here, this little down thrusting bar from about 120 this morning around November 14th. So could be a very interesting day inside of the metals marketplace. We'll keep our eye on gold. Now, the miners themselves aren't really doing a whole lot here. If we take a look at, for example, miners, if you take a look at how many are moving to the upside, you've got 2, 4, 5 out of about 40 or so out there. So they're still sitting. They're sitting by the dock of the bay saying, I'm not sure what to do out here. They're certainly not taking their cue from gold fighting back. Of course, gold is still down for the day, so it's why you see the miners doing what they are doing out here. In summation, let's take a look at about 2 minutes here. Let me just tell you what you ought to be looking for. I think the price levels that I gave you in the Qs are going to be very key. And again, that price level being 41.89. If we don't see the NQ break 41.89 today and stay below it, move down to that level, test it, and bounce off of that would be what it's been doing, in essence, since coming off of the lows from October the 15th, October the 16th out there. You break below that, then what you're likely going to see here is, number one, you're going to see the summation index for the NASDAQ composite get below zero, which it's really trying hard to do that. Once you get below zero, it starts to change its trend. If we take a look at the summation index out here, if you're watching this on Tiger TV, I've got the NASDAQ composite up here. You can see when it changes its trend, it gets a directional thing. Doesn't give you the price objective out there. That's when we got to go to some other tools, our rulers, swing points, retracements, breakouts, things along those lines out here. But the NASDAQ composite, the thing that is moving the highest, is also just showing us that under the covers there is some real trouble in River City. Inside the New York Stock Exchange, it's really the same thing out here. The NYSE, now the NYSE, it needs about 800 or so, over 800 net decline in issues today in order to turn its price oscillator down and start to change that trend out there. But if we see that taking place, your expectation should be that we'll see prices move lower into at least next Friday. I'll have to come back and reassess it and take a look at some of the other patterns that are out there. But I do expect what we're going to see is one more thrust low, and I prefer it to be a scary one, a big one, a quick one out there. That would be the sign that we'd be looking for that it's time to come back in on the long side. This is Steve Rhodes. This is TFNN. Have a great Friday, folks. I look forward to seeing you bright and early Monday morning. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.